Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. So let's look at all the stocks. First up is Bharti Airtel that posted its quarter four results yesterday after market hours. And if you look at the scorecard, they have seen a miss on the revenue front. The EBITDA and the PAT, all three of them were a miss according to ET Now estimates. Let's look at the numbers then. The revenue is down 0.8% on a sequential basis. The EBITDA is also seeing a cut of more than a 2.5% on a sequential basis. The PAT saw a decline of 28%, coming in at 2,068 crore rupees on a sequential basis, and the margins also saw a decline of 110 basis points on a quarter-on-quarter basis. Now they have recommended a final dividend of 8 rupees per share, and a couple of brokerage notes also that came out with their views on Bharti Airtel. BofA is maintaining a neutral with a target price of 1,430 rupees. They feel that for quarter four, African revenues were in line, but the EBITDA was a miss. Acceleration in the net debt, in the net adds, and the enterprise margins are seeing a dip for Bharti Airtel. UBS is also maintaining a neutral with a target price of 1,310 rupees. They feel that the quarter four results, the net add surprised positively, although the ARPU growth remained rather muted for the company. But the quarter four miss owing to the weaker Africa business, and the Indian business wasn't largely in line with the estimates, and they are maintaining a neutral on Bharti Airtel, and that's why this stock is in focus today.
All right, but with this, let's move on and let's welcome our second technical expert for the show, and that is Sneha Seth of Angel One joining us right now. Hi, very good afternoon, Sneha, and thank you so much for your time. Firstly, let's talk about your one of the pigs that remains from the defense space, HAL, on the roll, flying high. But do you believe that there's more upside left for HAL from current levels?
Yes, good afternoon. If we see the counter, it has given a very strong run up. If you see in this weekend itself, it is up by nearly 8%, and it seems that we are heading higher. I think the gap area formed around the lows around 3,970 should be acting as a support. So anyone who wants to go long or is holding any long position should keep that as a strict stop loss. And I expect it to at least rally towards 4,400, 450 zone.
All right, that's the take coming in on HAL. Continue to like this counter even at current levels. But moving on, let's shift focus to Shilpa Medicare, one of the pharma related plays, where the company has announced successful completion of early clinical development and ongoing phase 3 clinical trial of its newly developed drug, that is SML007, for the treatment of non-alcoholic fatty liver disease. The recruitment of the patients for the phase 3 has been completed across multiple centers, and the phase 3 study dosing is expected to be complete by end of Q1, and study is likely to be completed by the quarter 2 of current fiscal year. Now, this is an orally administered drug with significant benefits over the currently available bile acid family of the drugs used for the treatment of this particular disease. So on the back of the completion and successful completion rather of its phase 3 trials that are undergoing, this stock is definitely in focus, and the stock was also holding on to the gains of close to 4 to 5% in the morning session, but still holding on to the gains of 1.5%.
All right, coming to you, Shesha, you picked out Oil India for us. Tell us, why have you picked out this counter? What's the news flow?
After BPCL, Oil India has informed the exchanges that the board will be considering bonus issue in the meeting that is scheduled to happen on the 20th of May. So on the back of this bonus issue consideration by the board, the stock is gaining. The news came at about 11:30 today, and we saw that sharp spike that come in on the stock, and it is holding on to gains nearly 1.5% higher. Remember, the stock has barely done anything in the last 1 odd month, but it has nearly doubled in the last 6 months. Of course, we will watch out for that board meet on the 20th of May, where they will consider bonus issue. Today, of course, on the back of that, the stock is gaining in trade.
Right, then moving on, and Sneha, talk to us about Coal India. Seems like no stopping for this counter, because in the past 1 year, the stock has already doubled, but even today, very close to its all-time high levels. How is this stock looking on charts, and will you still be a buyer, and any targets that you're looking for?
If we look at this counter, Coal India, after surpassing the resistance zone of 250 to 60 zone, it has given a very sharp move towards, say, 480 plus levels. And recently it has been consolidating, but overall, if you see, it has been respecting the 89 EMA on the daily chart, and also has been respecting 20 DEMA on the weekly chart. Today it is already up by nearly 4%. I think we may see this counter heading beyond the record highs. So someone who's holding this counter can go, can continue to hold this counter, and someone who wants to take a fresh longs, I would say with a strict stop loss of today's low, that is around 449, one can go long. The targets can be expected around at least 497.
All right, moving to you, Ansh, specialty restaurants, that's what you picked out for us. An earnings candidate again, tell us what does the earnings look like?
Right, so the stock actually opened with 8% decline, but then we saw some pullback. It is still trading 4% in negative. The company reported revenue of 96 crore, which was up by around 10% actually, but the net profit, it was down by around 93% from 55 crore directly to around 3.4 crore. EBITDA was almost flat, whereas if you talk about margin, there also we saw a decline from 15.6% to 14.5%. Also on charts, we are seeing that the stock has actually given a breakdown from an upward sloping support trend line, and it trades below its key DMA levels of 20, 50, 100 and 200. In addition to that, the stock has also touched 2-month low today.
All right, moving on, Shree Cement is another counter that is in focus today. An earnings candidate, it's given a beat on all the estimates right now. If you look at the revenues, they were in line. The margins were better than what we were penciling in. Operationally strong quarter, and it has reported higher than expected realizations on the back of lower costs. Also, let's look at the numbers then. The revenue saw an uptick of 6.5% on a year-on-year basis. The net profits also saw, a surge of 28%. The EBITDA came in at 59% on a year-on-year basis at 1,421 crores. The margins also saw an uptick of 874 basis points, coming in at 26% on a year-on-year basis. Macquarie came out with a note on Shree Cement. They are maintaining a neutral with a target price of 27,034 rupees. They feel that the cost-led EBITDA was a beat. They have delivered a strong 8% year-on-year volume growth, which was better than the estimates, and the realizations have declined 3% on a quarter-on-quarter basis, lower than the peers, helped by its regional mix. Jeffries is also maintaining a hold with a target price of 29,500 on the counter, and on the back of that, Shree Cement is in focus today.
All right, but moving on, Sneha, let's talk about L&T. Then all these cap group companies are doing pretty well, but L&T has been an underperformer in the past 1 month or so, but the kind of a momentum that we are seeing picking up from the lower levels, how much positive you are regarding L&T right now?
If you look at the counter, recently we have seen some profit taking from the record highs around 3,860 odd levels. But if you see precisely, it has been recovering from the 200-day simple moving average, and it is the third session wherein we are seeing some buying interest coming in. So I would recommend, if anyone wants to go ahead and long this counter, or already someone who's holding, I would say you should continue to hold. I think the correction what we have seen, I think that is now has been stopped, or we are expecting this dips to be bought in very soon. So I would recommend buying this counter with a strict stop loss of 3,290, and on the upside the levels will be 3,520. If any move beyond this, that will be very interesting, and which can this can bring this counter towards 3,650 plus levels. So I would say it's a very good risk reward ratio at this point in time. So if anyone wants to take a fresh bet, they can also prefer this counter.
Right, that's about L&T. But moving on, let's focus to 361, ma'am, because Citi has come out with a positive note on this one, where they do maintain a buy rating with a target price of 920 rupees. They do open a 90-day positive catalyst wash on this one. They see the strength in the fresh, reoccurring flows and the new family additions as well. And they do expect elevated transactional income, unlisted market transactions, and the broking income can surprise positively going ahead. Now, any positive commentary on the initial traction in the mid-market? The market expansion currently was ignored by the streets, and hence these are the factors that Citi has come out with, sharing their positive stance on 361, ma'am. But the stock did open in the green, but did not hold on to the gains, and as of now holding almost flat.
Right, coming to you, Sneha, you picked up Jindal Steel for us. Now, this one was soaring away in trade yesterday after a stellar Q4 result, surging as a surge of 100% in their net profits. And also, the metal pack has been in focus. Tell us, what is the upside you're seeing on Jindal Steels?
If you look at the counter, it has continuously been in a range recently, apart from yesterday's session. So on the higher side, there was a resistance around 960 odd levels, and the support zone was around, say, 900. So it was trading in a range for quite some time. We have seen a strong move with decent volumes yesterday, and I expect this counter to, at least head towards 1040, 1050 odd levels. So I would suggest if anyone is holding and thinking of going ahead and taking a long bet, they can think of this counter as well. On the lower side, the strict stop loss should be around 960, which was the resistance zone. So with 960 as a strict stop loss, one can expect an up move towards 1040.
All right then, that was about JSPL. But Ashesha, coming to you, MSCI has announced some changes, though they will be effective by 31st of May. But talk to us, which are the stocks in focus regarding this news flow?
Yes, several stocks in focus on the back of MSCI changes that were announced today morning. Of course, this will be effective from the 31st of May. Sundaram Financial in particular, the stock is up nearly 7 to 9 odd percent. Berger Paints is also in focus. It is on the declining side, down nearly 2 odd percent. So 13 stocks have been added to MSCI Global Standard Index, and one of them includes Sundaram Finance, because of which the stock is gaining in trade. About $198 million of inflow are expected on account of addition in MSCI Global Standard Index, and the same stock has been added to MSCI Global Small Cap Index also, as a result of which we are expecting inflows of about $3 million. On the flip side, let's talk about Berger Paints, which has been excluded, and about $94 million of outflows are expected, and hence the stock is reacting negatively. So on the back of these MSCI changes that have been announced, both these counters are in focus.
All right, moving on. Sneha, you picked up Crompton briefs for us. Last 6 months, 20% move that the stock has given. Tell us, what are you penciling in on the charts for this one?
If you look at the chart structure, recently this counter has given a very strong move after hitting the lows around 260, 265, that range. From there onwards, we are seeing some fresh buying coming in. There was a resistance, the rising trendline resistance around say 335 odd zone, which this counter has surpassed, and I believe we may see an extension of the up move. With a strict stop loss of say 325, one should go long in this counter as well. Any move towards 370, 75 would be encouraging, and if we manage to surpass this zone, I believe we may see an up move towards 420, 425 odd zone. So this counter has a good up move recently, and the risk reward ratio looks quite well at this moment.
All right, let's come to you, Ansh. Let us know what's happening with MAN Infra, why this counter is in focus.
Right, so MAN Infra was down 5% in the morning. Then we saw some retracement. Currently also the stock is trading a bit in red by 1% around. The stock has actually, the company has actually reported revenue of 297 crore, which is down from 680 crore. We are seeing a decline of over 56% here. Even the net profit, that has come down by 29% from 91 crore directly to 64 crore. EBITDA has also come down from 124 crore to almost 49 crore, seeing a decline of around 60%. Even the EBITDA margin has declined from 18.3% to 16.7%. So everything looks negative. Even the chart seems to be turning bearish in the stock.
All right, moving on. Siemens is the counter that is buzzing in trade. In fact, it hit its 52-week high today because of a solid set of numbers coming in then, and a beat on all accounts. The revenue, EBITDA and PAT, all of them beat street expectations. The revenue saw an uptick of 18% on a year-on-year basis. The net profit came in at 802 crore rupees, a surge of 70% on a year-on-year basis. The EBITDA also saw a surge of 41%, and the EBITDA margins came in at 15% versus 12%, up 249 basis points on a year-on-year basis. The company has also approved the demerger of the company's energy business to SEIL. Also, Jefferies came out with a note on Siemens. They're maintaining a buy and hike the target price to 8,000 rupees. They feel that the $10 billion rupee capex reflects management confidence in the growth of the company. The clean demerger of power division has a lot of potential for value creation, and the 4% trailing Q4 order flow growth ex-sizable rail order should pick up ahead, especially with power transmission. So that's the word coming in on Siemens by Jefferies, and you can see the stock surging away, trading with gains of over 7% right now.
All right then, moving on, and Sneha, from the IT pack you have picked up, Coforge is the fourth straight day of gains for this particular counter. Quite a beaten down name in the IT space. But what's making you bullish right now? As well as, would you recommend a buy even at current market price?
Yes, certainly if you see this counter has corrected, after hitting like at least 6,750 plus level we have seen, and from there continuously from the Feb series we are seeing some selling pressure in this counter. Recently, if you see, it has reached the 200-day simple moving average on the weekly chart, and from here onwards we are seeing, like, it's been 4 sessions that we are seeing that smart recovery. I believe there is a hurdle around 4,916, 970 zone. So any move beyond this would be encouraging for this counter. In fact, we may see the pain, whatever pain we have seen. If we manage to see an up move beyond, say, at least 4,000 or maybe 4,960, then possibility is there that the overall chart structure would improve, and we may see an up move at least towards, say, 5,600, 700 odd zone. So I believe if anyone is, looking forward for a buy trade in IT space, this counter would be the one. The initial target, as I said, would be around 4,970, and any move beyond that, then we may see an up move at least towards 5,600.
All right, 4,950 is the target that Sneha is looking at. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back with more counters. Welcome back to Market Fatafat on ET now, and let's keep it going with all the buzzing counters, and let's shift focus to Blue Jet, because though the counter is not doing much in today's trading session, the stock is down about 2%, but actually JP Morgan has come out with a note where they have initiated coverage on this counter, and their target price is actually 360 rupees, which is very close to the current market price as well. What JP Morgan is highlighting is that the niche CM business could see double-digit growth, apart from on a muted base, though there is a muted base, that the base is not that strong, but on that base they are expecting the CM business to build on to a double-digit growth number, and the PI and the API to grow exponentially off a low base as well. So a decent commentary, not very much on the positive side, but the kind of a target price that they have come up with, that is just 360 rupees. The stock is not at all excited in trade right now.
All right, moving on, coming to you, Sneha. Colgate is a stock that you have picked out for us. Tell us what is exciting you about Colgate. We did see a bit of a profit booking come in on Colgate after it posted a good set of Q4 results. But on the charts, what are you seeing?
Looking at today's profiting, I think we may see further selling pressure in this counter. I think we may head towards 2,590 and below levels. So someone who is holding a long position, and I think I believe that we may see some further pain. If someone has taken a very short-term call, then I would say exit it. If anyone is willing to take a fresh bets, I would say wait for 2,550, 2,570 zone. Any correction towards this zone would be a good buying levels for this counter.
All right then, moving on, and Ansh, talk to us about Bharti Hexacom. Just after the earnings and a good brokerage note, the stock is holding on to the gains of 4.5%.
Yes, that's right. The stock is up over 4% in trade today. The company has actually reported revenue of around 1,868 crore, which is up by 7.8% on year-on-year basis. Also, the net profit has seen a good jump of over 10% from almost 202 crore to 222.6 crore. EBITDA has also gone up by 13.8% to 926 crore. We are seeing good improvement in EBITDA margin as well, from 47% to 49.6%. Also, the board has recommended a final dividend of 4 rupees per share. Also, if you see the chart, the stock seems to have given a breakout from its reverse head and shoulder chart pattern, which is a very bullish sign. So for those reasons, the stock is in focus today.
All right, coming to you, Shesha, then Jyoti Labs is the counter that you have picked out for us. Tell us about the news flow on Jyoti Labs. So why have you picked out this counter for us?
Reported its numbers an hour ago, and the stock is reacting negatively to the set of numbers that it has reported. Sharp decline is what we saw after it reported its numbers, down 4.5%. Now, if we look at the numbers on a year-on-year basis, they look pretty strong, but sequentially it has reported a decline. Company was reporting margins of 17 to 18% in the last 3 to 4 odd quarters, and they've contracted to about 16% in the fourth quarter, and that is what is impacting the numbers. Revenues on a sequential basis are up 7% YOI, but flat on a sequential basis, and margins, as I mentioned, have contracted to about 16.4% from what it had reported in the previous quarter, and hence the stock is declining nearly 4.5%.
And that's about Jyoti Labs. But with this, viewers, it's time to wrap this edition of Market Fatafat. Thank you so much, Sneha, Shesha, as well as Ansh, for joining us today and helping all our viewers, highlighting all the buzzers in trade right now. But viewers, before me and Ankita take your leave, have a look at the outlook from Rajiv. With the elections outcome less than a month away, is the investor caution warranted on the back of volatile moves? Should your go-to strategy be based on the buy on dips play? Here out from coming in from JP Morgan's Rajiv Batra, as he outlines the key themes to keep track of amid the ongoing elections.
We anticipated that going into election there will be rise in volatility. We saw VIX was at around 10 mark, and we anticipated it will go higher and stay elevated until unless the election got concluded, because that has been the trend since 1990. Only post-election the volatility declined. So our answer to them was that whenever any dips happen or correction happen, you should buy in the election, because once elections get concluded, irrespective of result, the median return you get from the market is 9 to 8% dollarized positive over 3 to 6 month period. Hence, correction to be better bought. Now, if we anticipate a policy continuity, our answer to them was you keep yourself positioned in a barbell manner, some safe and secure sector like a healthcare on a defensive side, but on the other side, continue to hold domestic cyclicals like financial, auto, and real estate. Started the election, that point of time, market was pricing in continuity overall. But at this juncture, the kind of the volatility we have seen, number one, and second, the relative underperformance. Because what has happened since election started from April 19th, market like S&P 500 US, HSCI in China, they all have ripped apart and gone to a plus 16, plus 10% kind of a year-to-date return. Nifty, if we will look, is still at around +1 or in a -1 kind of a territory. So suddenly from a top quartile performer in the first quarter, we have come down to a second quartile performer. So that clearly shows that market was not confident about the continuity. Hence, we have seen this one. Now, once you get a status quo, like the last election kind of a seat share result also, there will be a rally.
If you like this video, then like, share and subscribe to ET Now.